I know that you have been pulling back from emerging markets generally around the world, but there are still some pockets of strength. Are you still finding places like India or others to invest in globally?
Yeah, I mean, I think when it comes to how are you going to insulate your portfolio from these trade areas, it's a question of, is it somewhere to hide from, or are you actually looking for gains? I'd actually say for India, it probably is a place to be positioned in. It's not just hiding out. But, one of the reasons that we've seen such a great performance from India compared to a lot of the other countries is because it's somewhat insulated from the trade tensions. On one hand, they have also delayed a lot of the conversations and deferred the retaliation that they were maybe suggesting before. And plus, it's in somewhat of a closed economy, which means that in this environment, it will outperform. The interesting thing is, though, I was outside I was in Asia last week, and the sense we got is if you're not in China, there's a sense of positivity. They feel like positioning is a lot more attractive. They feel like valuations are a lot more attractive. They just need something from the trade area to turn a little bit positive, and then they're willing to get back in. On the China side, however, there is a real feeling of negativity and concern that this downward run has got further to go.
Yeah, and that is why you become incrementally more positive on the United States. The Dow is up 4% in the past month. The NASDAQ on a 5-day winning streak as well. Do you remain more confident that we are, to coin a well-worn phrase, the best house on the street?
Yeah, I think so. I mean, I think for the rest of the year, the U.S. equity market can certainly outperform a lot of the rest of the world, including emerging markets. At the moment, the economy is doing better than expected, better than the rest of the world as well. The trade tariffs works in favor for the US at the moment. Now, coming to 29, though, we may see a slightly different story as the US economy starts to get hit by its own trade tariffs in terms of inflation, business sentiment, and of course, as the Fed continues to hike. But certainly for this side of this year, I'm still quite positive in the US equities compared to the rest of the market.
Yeah, and so what is your biggest concern then, Seema Shah? What is the biggest risk? We've talked endlessly on this program and others on CNBC about how corporate earnings are great, profits up, buybacks are strong, the tax rate's cut. We get all that, but you're paid to worry as well. What's the biggest worry out there?
I wish I could be a bit more exciting this, but I still think that the trade war is still very concerning. I think that there's many people out there who think that Trump is going to pull back from the protectionist agenda, as we go through the year. But the truth is that, look, he's got the midterm elections coming up. This is a great way of exciting his base and getting them out to vote. Plus, there is a protectionist streak in him. He has been talking about it for several decades. This isn't just in the last, 2 years since 2016. So I don't see he's going to push back from where he is now. And I feel like this is going to continue to be ramped up at least till the end of the year.
Yeah, and Seema, so we look at that aspect then here, and we saw China have its, by the way, we keep showing that China had its biggest one-day gain in over 2 years. The market's been decimated this year, still down over 20%, but a nearly 3% gain overseas. Does that one-day move make you more confident in China? You think this is the start of some good investment opportunity or some kind of just a random bounce?
Yeah, the kind of the dead cat bounce term comes up to mind. Look, I think China has got a lot of concerns growing for it. It's not just the trade side, but there's also a slowdown in their own economy. They have the financial regulations coming up, which is weighing on the market too. The depreciation of the renminbi is a concern for many people. They're worried about capital outflows. So I think there's a lot of concerns out there. I would, on my side, I would prefer to stay on the sidelines till maybe trade talks start to improve, and then valuations are so much more attractive. But we need something to improve to get to the point where people want to start getting back into the Chinese equity market.